CPI failed breakouts. We have a lot to go over, and they are evacuating parts of the Iraqi embassy, which we have to address. But I think the big thing to address is to drill into this and just start and rip right into it. And I really do appreciate all the comments. One comment really stood out, and I'll share it with you in a second, because it was just such an astute observation. But if you can see where we're at, we measure off that 830 bar, and we love to measure that bar. Why? That bar tells us exactly where the algorithms are, where they're net to buy and where they're net to sell, all within 5 minutes. And you can even drop it down into a 1 minute chart. You can see it even clearer. All that tied in 1 minute, all understanding exactly where the algorithms are. One could even mark that off and know exactly where they'd want to short or exactly where they want to buy, right along with the algorithms. It's always funny to me when people get upset, like, oh, the algorithms control the market. They tell you exactly where they are. All you have to do is pay attention. Super easy, really is. And if you can't never get above that level, can't never, right? I'm gonna need more coffee. I can see it coming. But if you cannot get above that level, then guess what? You're going to have a problem. And we saw that today. I mean, there's some things out there that weren't great, and we're going to address them and make sure that you're prepped for tomorrow. And you're going to need to be prepped for tomorrow because there's a lot going on here. I would say the biggest issue for me was the telling part of this little move right here at 804, where good news, we have a deal, but nothing's really in writing. And I have to agree to it, and the president of China has to agree to it, but we have a deal. So there's really nothing done. And as that started to come out, it became more and clearer. There was actually an article in the Washington Post on this, and that's why Apple sold off the way that it is. But we'll address some of that in a bit. But you can see that level right in here, and exactly, algos are telling you exactly where they are, and they're telling you exactly what they're going to do, and they're rejecting that level. So we flip this to a 5 and take a look at it. What did they do all day? Well, they just walked us down all day long. And then they started rejecting that 50. And it's always important to mark that 50. I find it important. You should do what you're comfortable with. But I do think that's important. A couple things here. As always, I read your comments. Stu commented he felt like 27.5% of the people don't subscribe to this channel. So I looked into it. And for those that watch time for the last 365 days, it's actually 27.2, Stu, so it is dropping a little bit. Subscribe to the channel, click all notifications. Let's get to it. I'd like to spend a quick moment on the NQ and just show you the same exact levels that were marked off. You never got above here on the 5 minute from 8:30 on. So if you thought that you were going to just rip today on the indexes, you thought wrong. All you have to do is mark these levels off. You can see the retest of the phone call that went great to the low of that 830 bar, which just happens just by a coincidence. I'm sure it's got nothing to do with algorithms, are tied directly to that close and that open. So, and then you could kind of see how that level became the issue until that issue broke at 145. And then the new issue became what? That level right here, which also became, see how it's all tied together? I mean, it's not rocket science. You can actually see these levels tied together. It's very clear on where the algorithms are. And if you pay attention to that, you can benefit from it greatly if you are a futures trader. I just can't stress that enough. If you're not looking at where these algorithms are and you want to trade futures, I think you're doing yourself a huge disservice. If you take a look at the process in and of itself, did we really go anywhere? Not really, but to me, that's more or less the problem. Rising wedges tend to end in tears, and this one's setting up like to not be great. And people are saying, oh, well, we're moving. We are, but at what cost? And here's where I'm going with this. If I look at this from a perspective of the RSI, and I could say, well, we worked it off and then we're coming down and we worked it off and we're oversold and that's why we bounced. And then we extend this out to the hourly and we can see this very clearly that you would have a divergence here where you have a high here and you have a higher high and then you have a high here and then you have a lower high. And I would say that's a divergence. I would also say that you've already undercut that divergence right here and that fits perfectly here. So you are in line, but you're not in line with the RSI. So then I would go to a 4. I get asked how to do this, and I'm working on a video for it, and I promise to get them out there. But then I would look at the 4 hour and go, well, we're just kind of grinding along. So then I just start looking for other pieces of data. And the biggest tell for me was the fact that you couldn't get moving on a lot of really good news, in my opinion. So people either don't believe the fact that there's going to be a deal with China. I think eventually there will be, but I don't think it's right now. I just think they wanted to come back and say the word fruitful 17 times. But I do think that you're going to get a deal eventually with China. I do think that, but I think that the bond market is telling us very clearly that they want to buy bonds. And that's leading to names like Philip Morris that are obviously going to rip on stuff like that. And so PM, anything that pays a decent yield, you can see that hitting new highs. BTI will hit new highs. This stuff's all going to grind higher. I believe this is paying 7.5% or 8%. So all these kinds of names are going to start grinding higher. I don't know if ZIM is going to really participate in that because you're going to think slower economy. they pay a huge dividend, but slower economy, maybe not a deal with China. ZIM does a lot of goods from there. But as always, doesn't matter if cigarettes are $20 a pack or $20 a piece. People are going to smoke and you're going to get your dividends. So they start to rotate into those defensive names, and that's exactly what we saw today. I saw a lot of failed breakouts. I'd like to point some of them out, but before that, I think we need to cover CPI. Now, I'd be remiss if we don't go through this, but U.S. diplomats ordered to leave Iraq embassy over unspecified security threats. U.S. mission in Baghdad are evacuating diplomats in response to unspecified security threats, according to one former and 2 U.S. officials. Now, whether or not this is some kind of posturing, whether or not there's something really going on over there remains to be seen. The market was mixed on this. We sold down a little bit on it, but it just really adds to certain levels of uncertainty. And I think it's worth pointing out that this does tend to destabilize the Middle East a little bit. But there's some other things out there that we really need to review. And I think the big one is the best place to start, which is CPI and then PPI, which is going to be another event we're going to deal with tomorrow. So what we have here is we have inflation still not showing tariff-related spikes. CPI shows muted prices, open path for Fed rate cuts later in the year. CPI prices rise a scant 0.1% in May. Now, the important part of this is the language. Consumer prices showed little sign of tariff-related increases for third month in a row. The one thing that Itchy always says is the third month in a row. He's looking for 3 months of data. So you have not seen any increases, March, April, May, in CPI. It does really open the door up for him a little bit and saying, okay, maybe I will cut rates. But the question is, why does he need to? You have a dual mandate. As long as you don't have an issue with jobs, what is the impetus? Why do you have to cut rates? And I think that that's also part of the thing here that people are missing. But the absence of rising inflation unlikely to spur the Fed to cut interest rates this month or even next. But it could pave the way for reductions later in the year. It could, but you have to make sure you want it. If we get it because we're losing jobs, we really don't want it. Top Fed officials in economics think higher U.S. tariffs will cause price spikes. But we're not saying it yet. And the question is, does that mean that the demand's not there at all? And that's kind of a question that I think people aren't asking. Like, if you're not seeing a price spike, what would have happened to CPI and PPI if there were no tariffs? And I think that's a really good question to ask yourself. That might be one of the reasons why we're not seeing the XLY or XRT rally. But nevertheless. So if we just take a look at how this played out versus where we were previously, at 0.128, 0.102, 0.2, 2.4, 2.3. Inflation, and to me, the big one was core inflation because nobody was here. Everybody was 0.2 to 0.3. Like nobody was at this level. And it came in and just absolutely just decimated. So is it good? Yeah, it is good. And it usually means that PPI is going to come in pretty weak. And that we all know that means the bond market's going to get strong, which it did at 1 o'clock. We're going to cover that in a sec. But I do think there's some things here to go over. So PPI tomorrow and core were negative last time. That's really deflation. That's basically nobody wants them because they don't really want to build anything. Well, why? Because you have tariffs and you don't know how much demand you're going to have. So it really puts pressure on this as far as pricing pressure. And that could come out again. You're seeing a consensus to the upside, but last time was negative. With a weaker CPI, I'm not really sure what to expect tomorrow, but I do think that this is going to be weak again. And I'm hoping it's going to be weak if CPI is weak. The last thing you want is a PPI to be strong and a CPI to be weak. And the reason for that is relatively simple. PPI is what the producer pays. CPI is what we pay. Easy way to think about it. Somebody makes a burrito and we buy the burrito. The burrito is from CMG. That burrito costs $15 or whatever it costs. To get the ingredients for the burrito is PPI. Think about it that way and it makes it a little simpler. Because the difference between these is how you get corporate profits. If you just think of it that way, there's more to it, but if you think of it that way, it starts to make a little more sense. The other thing that I think we have to be concerned about here is jobless claims. When I first started learning to trade, that's all we stared about in the mid to late 90s. That's all we stared was just initial jobless claims. And the reason for that was because if the economy was good, then people had jobs. If they had jobs, they went out there and they bought stuff. It was really that simple. The other thing is you're near 3-year highs here on continuing claims. You came down 3,000, and I'm really curious how this comes out tomorrow. If you see a spike in these two numbers, it's not going to matter what the PPI does. It won't matter. All that will happen is we'll sell off on this. And I'm starting to wonder if that's the concern in the market with the XLY names and why we can't really get anywhere with them and why the market does look a little tired here, in my opinion. AVGO is usually the top, but it does look a little tired. So we want to watch these two numbers tomorrow, which is initial jobless claims. You really don't want to see over 250. You certainly don't want to see over 275. And you certainly don't want to see this over 1925 or something along those lines. And as long as PPI is in line with consensus, I think we're okay there. But this is more troubling. The question that I have, and I do, in all seriousness, I do find what Stu said hysterical, but I am curious about this, guys, so comment on it. Are you concerned at all about deflation? Is that even on your radar? Because when I look at this stuff, I'm wondering if there's any pricing power in this market, and that's why XLY is not rising. And I actually think that we are, and this is where I'm going with it. Are we seeing, and this is the question, and please comment on it, especially if you have like a real opinion, like not just like, don't make something up, but a real opinion on this. Are we seeing tariff inflation in those numbers? And that's really what's keeping it even up higher at this point, because I think it is. I think it's impossible to think that people didn't front load their purchase order. So the question really bodes, what's that number really going to look like? I'd rather do these in live calls. Maybe we should do more live calls, but I really am interested in that because I'm trying to wrap my noodle around that. Now, we do have some good news here, and I do want to point out the good stuff before I get to the stuff that is concerning me. But what I'm seeing here on the breadth, I have the 20, I have the 50, and I have the 200. And I took out the 5 because I want to focus on the medium, the longer, and the longest. We're back over 50 on the 200, which is long-term bullish signal. We have a long-term bullish signal. We're going to get into these signals in great detail on Saturday's video. And then you have the 50, which is higher highs. This is awesome because this is the rotation that we're seeing. They're buying the MOs of the world. Remember, these all add up. If MO, PMI, Philip Morris, BTI, they all come out, they all start moving higher. Those kinds of names, they're going to lift the other names. You're going to rotate through the sectors, they're going to lift the other names. This is all going exactly how you want it to go, the rotation is. For me, I think the larger issue is why are we seeing so many failed breakouts? And that's exactly what we're seeing. And I'll show you what I mean by this. And it's a red flag. It's not a yellow flag, it's a red flag. So here's our market, here's the SPY. And then we go here and take a look at something like XLF. And we go, all right, well, we got some really good news today on rates and we have this doji, but financials are trending. Okay, so what happened with JP Morgan? Well, we opened, and just look at the bar. We opened on really good news, and what happened? We're below the open. All right, how about Goldman? Okay, Goldman held the open. All right, so the trading's picking up more than the banking side, and they're leaning towards Goldman that way, which is what you want to see. But regionals really benefit from this, right? The regionals do. Regionals closed at the low. All right, well, let's go take a look at BK. Well, BK, well, that's down, couldn't hold the open. And when I started to look at these, MTB, look at the low, off the open. Well, which regionals held? Well, the retail region. All of a sudden, everybody has to be in SoFi. Why? Well, it's a regional bank, but it's the one that all retail owns. Take a look at Hood. It's up. Why? It's a retail favorite. So who's buying these names? I'm leaning towards retail bought these names today because, again, if I went and looked at the end of the day on some of these names, you just kind of flatlined. Right when you got around that 350 level, and you can kind of see it a little bit where, let's just find it exact here so I can show you. You didn't really do much. Like, you didn't explode. All right, you have 20 cents. Who cares? So to me, it's very telling. And again, here, I'll just show you what I mean by this. Here you are off the open, 9:30, got to get in. And then they just buy for an hour, and then the bid goes away. Well, if it's going to be institutional buying of these names, it's going to insist upon itself. And this is not doing that. That in and of itself is an issue. Here's another issue for you, and I will just point this out. So I own Lilly. I bought it recently. Where's my push? Where's my follow-through push? I get this doji below the open. This in and of itself is also a concern of mine that I'm not seeing follow through. Recently, Amazon broke out. Reversal. This kind of stuff you want to pay attention to, and I'll give you one that's going to annoy a lot of people. But watch this on Meta. And this literally is one of my favorite trades. You have the top of a chart right here, and then you form what I refer to as a dragonfly. And it's not perfect, but I'll show you it. A perfect dragonfly would be the open and close at the absolute high of the bar, and they're so rare, it's scary. But so you look for that pattern, and here it is. Wicks or price rejection, open, close near the high. Flips it right here off the open, goes higher, and then just smashes everybody's hopes and dreams. When you start to see this kind of behavior, you want to pay attention to it because you're seeing a change in trend, but at the same time, you're getting failed breakouts. And this is what I mean by that. When you look at something like PLTR, everyone's giddy on this one today, like, oh, look, we broke out. No, you got set up. You just don't realize it yet. So here's your breakout. There's your undercut of the doji. Tries to rally back to there, and they just dump more on you at 2 o'clock. That's institutional selling. That's textbook institutional selling at 2:30, 2 retail that bought in the first hour. I mean, if I was to ever do a book, that's what it would look like. This is where retail buys and gets giddy. This is where institutions sell as much as they can back to retail. And that's exactly what happened, and look at where you are. I'm not saying these names eventually aren't going higher, But this kind of behavior is a little concerning. I'm not saying that you're falling out of bed. I'm saying you're going to rotate, in my opinion, and I'd be really careful of buying the breakouts. I also am concerned when I watch names like NVIDIA that had really good news this week, and you cannot see it get out of its own way. You cannot get through this 145. Just take a look at that. And this is more important than me saying watch this one or watch that one, but I do have two that you need to watch for tomorrow that I think are super, super important. But if I look at that 145, tries to rally, can't, tries to rally, can't. You need to pay attention to this stuff. And then you come back to these levels and it's over and over again. You're holding your support levels. So it's not like you're falling out of bed, but anyone buying the breakouts is getting absolutely destroyed on these names. And I think that's important to understand. I'm not saying that some of these are not pushing and that some of these sectors don't look like they're going to push, but this kind of behavior, this is when the brakes go on. And here's another one. And I think Tesla's a little tired. I think we all think it's a little tired, but here's your reversal. Here's your first day of your reversal on Tesla. And then you get something like this, where you tried to rally. And we'll just show you where I'm at right here. You tried to rally back up. And let's get rid of the pre and the post. And let me just show you the level. Tries to rally to that open. Everyone finds out that Elon's, tackling people in the Oval Office. And then all of a sudden you get this huge breakout. No, everything's fine. I love you, bro. No, I love you. And then all of a sudden you try to get through. You can't. Here you come back again. What happens? But you held. So this is super interesting to me, this area. But you failed today. And today was the first day that you failed. As a matter of fact, when you look at this on a 4-hour, this is the first time you've had 2 4-hour red bars in a row since you broke down. So this has a long way to go to get through that kind of minutia right now that goes all the way back. And you can see how far back this goes. But there's more to this. And I really think you have to pay attention to it. 2 names that you should watch tomorrow. This OKLO, 2 things. Most people are going to think that this is going to drop because there's a secondary. Anybody that has done any kind of fundamental research knows when a company like this that gets great news and has 0 in revenue probably is going to do a secondary that day to raise capital. I mean, why wouldn't you? You'd be foolish not to. My sense of this is that so many people want to own this that are short it, is now that they know the size of the secondary, which is only 300 million, go look at the short interest. Now that they know the size of it, you might go up on this. I'd watch this again. This is textbook short squeeze behavior. And I would watch this. Also, Oracle, it's up after hours, which is really, really good for tech and really good for the overall theme of AI. What I would say about it is the growth from the cloud side is why it's running. And if you have the time, and I haven't listened to it yet because it didn't take place at the time recording this, but I went to listen to this conference call. But when you look at the growth of where they're saying that this is supposed to go and the growth of not only the revenue, but the infrastructure, I'm going to want to listen to this one. But I would expect some positive comments on this tomorrow, and it should be able, based upon their guidance, it should be able to hold its gains. So if this fades, watch the conference call, but if it fades tomorrow, then it's going to tell me that it's pretty telling on which way we're going, that even good news can't hold this market up. That's it.